side, we've got a global perspective coming in on commodities. Peter McGuire is CEO at Trading.com. Peter, good morning. Good to have you with us here. Thank you very much for joining us. So even last night, you basically had what are described as safe havens, which rallied a little bit, but mostly on the currency side. Day before yesterday, you had that big move in silver. Silver prices shot up 5%. Gold's, of course, come off quite a bit from the 3,100 kind of lows. What's your sense? How are things set up for these two commodities?
Well, good morning, Prashant. I mean, when you're seeing what's happened as far as, and you look at the first part, US dollar, that's come under more pressure and it's under 99 now. So that US dollar index sitting at about 98.80. And in turn, as you mentioned, silver had a really nice rally. It's approaching that $35 handle. Gold's back at nearly 3,400. And you've also had bond yields taking a little bit of a dip. You've got your 10-year now sitting at 4.37. That's been sold off. So I think all of those moving parts, currencies had a big rally to the upside as far as euro, and a lot of, I think, smart money found a home in silver and gold in that short period of time.
Okay, all right. Hi, Peter. Good morning. Good to see you in. But people say that gold has been shining long enough. Maybe it's time for silver now to outpace gold. Would you agree, or do you believe that that won't be the case?
Well, Nigel, it is good to see you, and I feel as though if this is for the viewers, they need to do some historical data and some homework on this. Look at the gold to silver ratio and look at its long term, what it's been as far as that ratio. At the moment, it's probably close to, back of a postage stamp calculation, probably 95, 96, 97 to 1. But I feel as though that silver will take a rally to the upside, and I feel as though, underinvestment, as we've always said, over the last couple of decades, will come home to roost. The other side, of course, is industrial demand and all the other usages as far as silver. So, yeah, I think silver's got more sunshine ahead of it than gold.
Okay, interesting. All right. Peter, the other point that we look at from an India, both equity as well as commodity market perspective, is crude oil prices. Supply seems to be ramping up. Demand seems to be a little bit soft as well. Brent, though, holding at around that $65 per barrel mark. What's your take?
Nigel, I think a couple of things. First off, I'm very interested to see what the kingdom came out. When I refer to the kingdom, I'm talking Saudi. And I think there'll be an oil glut come Q4. It could be even in the tail end of Q3. That glut is going to be very interesting, how that takes charge as far as market and price. So I think over the end of Q2, leading into Q3, I think prices will come down a little bit from here. But I think certainly leading into Q3 and really into Q4, they'll be significantly cheaper from here. When I say that, could be down $8 to $10 a barrel. What's going to be the key driver, I think, is going to be where that 411,000 barrels of extra production in the sense of output, you're going to see, and this is what the kingdom's calling for, Nigel, is that to be rolled through into August and September. So I think it's going to be good for consumers and certainly for India.
All right. What are you making of steel price trends as well, Peter? Because, President Trump, he's gone ahead. He's doubled the tariffs out there on steel. So in the near term, maybe there was some pre-buying that we saw just in the near term. Though demand trends coming out of China are still rather weak. What's the range you're looking at on steel prices?
Well, I think, where it is at the moment, if I look at ore, you're looking at iron ore just under 100 around that sort of benchmark. I feel as though with the tariff situation, no doubt that President Trump wants to gain momentum as far as manufacturing internally in the US and the deals that he's structuring. So I think you're going to see a little bit of volatility across that sector in the short run. You've got copper also sitting at 9,600. So there's going to be $1 to be made, but I think it's going to be fairly range bound until we move further into Q3 and get this tariff situation under control. And then you get some real opportunity to see where I think the smart money will find a home across some of these industrial metals.
All right, Peter, since you briefly mentioned copper, from base metals, what are you most bullish on?
Copper, I like it. I mean, it seems to be slowly trading up, Nigel, back at that 96 handle, 9,600 that is, metric ton on the LME. So I feel as though that you'll probably see further upside, maybe take 10,000 out this month. It's going to be a long month, June. And I think the overall momentum will be a little bit stronger than where it is at the moment. Demand's strong, and there's plenty of infrastructure. You've only got to look at that most magnificent city you call home. Have a look at how much copper would be going in and steel into, the infrastructure of Mumbai.
All right, it's always a great conversation. By the way, so oil glut coming, right? That's quite interesting. Sorry, I missed that, Peter. You said prices dropped to what?
I think they could be down $8 to $10 from here, Prashant, and I'm talking at the end of that Q3, Q4 sort of level or time frame. And the oil glut. This is what the kingdom's saying. They feel as though that there will be a glut, and this is obviously it's a game of brinkmanship. They want to see compliance across OPEC and its allies. That's the kingdom, that is. And it seems to be, if you've got too much supply, you know that as well as anyone, you're going to see cheaper prices unless you see something dramatic happen from a Mother Nature perspective with hurricanes or if you saw geopolitical.
All right. Peter, had more questions out of time, but thank you for joining us on short notice. Really appreciate your views and perspective here on CNBC-TV18.